Why do I keep making the same trading mistakes? That's the question almost every prop trader asks at some point. You know what to do, you read the books, you watch the videos, you understand the concepts of risk management, but when the trading session starts, you end up doing the same exact mistakes you did the last time. And it's not just a bad luck, it's your psychology. And it follows in a very predictable pattern. In today's video, we're gonna walk you through 3 main psychological stages every prop trader goes through, from the first day they're opening a chart to the day they're scaling their capital. And in the end, we're gonna show you the psychological framework which only prop firm can offer. Now let's break it down. First stage, the beginner. Trading looks easy until it isn't. Stage 1 begins before you even have placed a real trade. Someone posts a screenshot on social media, $3,000 in just 15 minutes. An influencer running a course promising the strategy banks don't want you to know. A YouTube video showing a trader turning $1,000 into $50,000 in just 2 weeks. And your brain does what all human brains do. It builds a story. A very convincing story that trading is easy and you can make it work in just a couple of weeks. The story itself isn't evil, but it creates a psychological state, unearned confidence. Here is what unearned confidence looks like in live trading. You skip your own rules because the setup feels different. You add to a losing position because you're 100% sure that it's gonna turn. You skill backtesting because backtesting is for people who don't have skills like you. You blame bad entries on manipulation rather than reviewing your set of rules. And then you fail. Not because you can't trade, but because the challenge requires consistent, rule-based decisions across multiple days. And your emotion-based approach can't sustain it. Here is the honest truth about the beginner stage. The problem isn't the knowledge. Actually, in most cases, beginner traders consume extreme amount of educational content. The problem is in absence of system, a clear set of rules that they need to follow. Here is the fix for this stage. First, write your strategy down, not in your head, on paper or in document. What are the specific conditions required for you to enter a trade? What's the time frame, structure, and confirmation? And if you can't articulate it in writing, you don't have a strategy. Second, backtest it. Take those written rules and go through at least 6 months worth of trading or 100 positions. You will answer these questions. What's your win rate? What's your average risk to reward ratio? What's the longest losing streak you had? Data tells you if your edge exists. And here is why it matters emotionally. Once you've seen your system work hundreds of times, you trust it differently during live trading, because your trust is built on data. And the third, start journaling every trade. Not just the P&L, also entry reason, pre-entry emotions, and whether you followed your plan or not. After 2 weeks, look at the trades that broke your plan. Almost always they came at specific emotional moments. Overexcitement after a winner, frustration after loss. So the journal makes those patterns visible. And you can't fix what you can't see. Stage 2. You pass the challenge and now the real test starts. Stage 2 is the most frustrating stage to be in. And that's because you have already proven to yourself that you can trade. You passed the evaluation, now you're funded. But you're still making behavioral mistakes. And it doesn't look like ignorance, it looks like this. A bad Monday becomes a revenge trading Tuesday, and a winning Wednesday leads to oversized positions on Thursday. You're 2% away from your desired weekly profit target, so you take a 1 more trade in order to make it happen. And it wipes all of your gains. You break your position sizing book because the setup is a textbook. This isn't a strategy problem because the strategy works. You pass the evaluation. It's your behavior patterns problem. And the hardest thing about these patterns is that most of the traders don't even know they exist. They remember the trade went wrong, but they don't remember the emotional context surrounding this. So here is the fix for this stage. You remember the journal that helped you on the stage 1? Upgrade it. At stage 1, you journal to learn the strategy. At stage 2, you journal to learn yourself. Before every session, write 3 lines. What's my mental state right now? But honestly, what's my main goal for this session? Which rules do I have to follow? And what is the specific rule that I'm most likely to break today and why do I think I will break it? After every session, answer these questions. Did I follow the plan? Yes, no, or partially? If I deviated, what triggered it? Review this weekly, and after 4 weeks you will see the patterns appearing. You will see that on Tuesdays, after drawdown days, there is a high chance of revenge trading. If on Fridays you're near target, You're oversizing and over-risking. Post-win positions, poor setup quality. Once you see the pattern, you can build a defense around it. Hard daily limits, screens off after daily targets, pre-session checklists. The intermediate stage is where the funded account is either lost or you transition into making consistent rewards. The difference between traders who stay funded and those who cycle through the accounts is almost always behavioral, not technical. Now we go to the stage 3, the advanced trader. Everything is working well, but why are you self-sabotaging? Stage 3 has traps that almost nobody talks about. It's the stage where everything is going well, and that's exactly where the new psychological set of problems appear. You've got the consistency, your strategy is proved across multiple trades, both on backtesting and live trading, but you're still not scaling. You're still tweaking the strategy, adding new indicator, trying new asset. You adjust your entry conditions, try to add new confirmation. You run the backtests again and again on a system that already works. This looks like diligence, but actually it's avoidance. The advanced trap comes in two forms. First is scaling fear. The belief that bigger account means bigger mistakes. So you stay small, stay safe, and stay stuck. The account is at the same level, because growing it feels like too much risk. Or the second type is being too relaxed. You've hit your consistency, you passed first and the second stage of your trading challenge, and slowly you start to relax. The discipline slows down, and you're not really following the rules on every trade, because now you think that you know better. Here are the fixes for stage 3. For scaling fear, create a systematic scaling protocol, the checklist that tells you purely on data when to scale. Remove the feeling from decision entirely. The checklist will look something like that. 50 plus trades with consistent rule adherence, max drawdown within defined parameters across those 50 trades, performance stability across at least 2 different market conditions, and behavioral consistency in your journal. If all 4 are checked, it's time to scale. And if you're feeling too relaxed, raise your standard. Instead of asking, am I profitable? Am I improving? Track the percentage of trades that followed every rule in your plan, not just the trades that paid off. Elite traders don't just manage the market, they manage the version of themselves and try to consistently grow and improve. And here's why prop trading can help you build these psychological, healthy patterns. The broker model puts your psychology and capital at the same place. That's a structural problem. And just a simple mindset hack cannot fully fix it. Every losing trade comes directly out of your pocket, and it creates an extreme amount of pressure on your mindset. In prop trading, you don't have it. You're working with simulated capital. The worst case scenario for you is challenge fee. Not your savings, not your rent, not the money you cannot afford to lose. This lower emotional stake creates a space for you, so you can actually follow the rules. And also, the rules teach you the discipline. Every rule in prop trading directly corresponds to a disciplined action that professional traders practice. We have described this in detail in this video. Make sure to check this video out right after this one. So which stage are you in right now? Stage 1, the beginner trader who doesn't really understand how to work with the market. Stage 2, the intermediate trader, already some results but still fighting with himself. And stage 3, the scaling trader, consistent but afraid to grow or starting to be too much relaxed. What stage are you in? Comment under this video. Every stage has a fix, and the fix is always the same family of tools: written system, consistent journaling, and data-driven decision framework. The market will always reward discipline, preparation, and long-term vision. If you're ready to start building the real vision with the structure behind it, check the description and start the challenge together with the Trading Pit. Happy trading to all of you.